Are you looking to multiply your money? Got some money saved but don't know where to put it? Well, look no further because today I'm going to be sharing the best asset class that you can put your money in today, starting now. Let's go. What's up, you guys? It's your friendly neighborhood realtor, Trevor Wineland here, coming at you with the best investment class, rental properties. And I'm going to be breaking down exactly why it's such a good decision to park your money into rental property. If you're new to the channel, please go ahead and smash that subscribe button, drop a like, hit the notification bell. I really appreciate it, guys. Without further ado, let's get right into it. Alrighty, guys, so yesterday I was thinking, what is the most valuable thing off the top of my head that I can give to you guys, my viewers? So I was thinking about it, and then I realized this, hands down, can definitely change a lot of your guys' lives. So I encourage you to sit down, focus, give me 10 minutes of your time, and I promise you, you're not going to regret it because, this information changed my life, and I know for some of you guys, it could change yours as well. So please pay attention and focus up. All right, you guys, so why is real estate investing, specifically rental property, why is it so powerful? Well, basically, it breaks down into 5 different facets. We got leverage, debt service, cash flow, appreciation, depreciation, and tax benefits. Those kind of go together. So we're going to be going through each one of these guys. I'm going to explain to you exactly what it is and why it's so good and what advantages it has over other asset classes. I'm not really going to go into other asset classes and how it stacks up to real estate. That's a different video. But today we're just going to focus on rental properties and all the different ways it pays you guys, getting you more money into your pocket. All right, guys, so the first one we're going to go over is leverage. Now, leverage is extremely important when you're buying assets. This basically means how much money will other people give me to go buy an asset. Now, with real estate, it's huge. There's guys that have, they might own $2 million worth of real estate, but they have a bank has given them, 20 to 30 million dollars to go out and buy those assets. You know what I mean? So with leverage, it's basically, I can give the bank, let's say 20%. Let's give a good example here. So we got our house here. Don't mind my drawing. It's going to be really bad. Okay, so let's say we got a house here and it's $200,000. Okay. And this is an asset. This can produce me money in all these other ways. So I can go to a bank and say, listen, I want to buy this $200,000 asset. Will you guys loan me the money? And if you check out and all that stuff, you can basically, let's say you got to put 20% down, because unless it's your first, property and investment property, you're typically going to have to come up with 20% down. And, I can make other videos on how you can get away with not having to initially come up with that 20% down. Especially if you're a first-time home buyer, I encourage all of you guys, if you haven't bought a home yet, go out and buy a duplex. If you're a first-time home buyer, you only have to put down, especially if you go FHA, you only have to put down like 3.5%. So, I don't know exactly what that is, but 200,000 at 3.5%, that's what, like literally $7,000. You can literally put up $7,000 and control 2 units if you bought a duplex or a triplex, fourplex. That's a separate video. We'll go into house hacking, but let's just talk about a general investment property right now. So say we got a house, a rental property you're looking at, and it's $200,000. Okay, you can go to the bank and say, all right, I want to buy this. So basically, they're going to ask you for 20% down. So 20% of 40 grand is $40,000. So basically, I can go to the bank and give them $40,000, and they will give me the other 160 to control this asset. You can't really do that with other asset classes. And you can do this over and over and over again. You only have to put a small amount of cash down, and then you can use the bank's money to control that asset and make money at the rest of the stuff. So That's a huge thing with real estate, guys, being able to use the bank's money to make money yourself. All right, guys, number two, I guess the second thing we're going to talk about is debt service. Now, when you own a rental property, we're going to keep using this $200,000 property example here. Let's say, you did 40 grand down, you got a commercial loan, the bank gave you the other 160, and let's say your mortgage, let's just come up with a rough number. Let's say it's 1200. Let's just say it's 1200 for sake. I'm not saying this is exactly what it's going to be, guys, but let's just use it for the example here. Let's say your mortgage payment is $1,200 a month. Now, when you rent this property out, if you do the deal correctly, that's a big caveat there. You got to know what you're doing. So you got to either find a professional or, watch videos like this to figure out how to do it. But, let's say this $200,000 rental property that you were looking at, let's say the average rent for that is 1,500. Let's say 1,600. Let's make it a good deal. So it's going to rent out for 1,600 when you have a tenant in there. 1,600. So basically what that does, guys, is someone is paying that mortgage for you. Yes, you went to the bank for that 40 grand. Yes, you owe them a monthly mortgage payment, but it's going to cover it when you get a tenant in there. So it's basically, as long as after you come up with that initial investment for the down payment and the closing costs and all that, you're basically skating for free. Now, obviously, stuff breaks, all that good stuff, there's a lot that goes into it. This is just a general overview. But, if you're renting this out for $1,600, $1,500, even $1,200, guys, even if you only rented it for $1,200 and just had it pay off the mortgage, guys, you're literally getting a house paid for after you come up with that initial investment. And it's going to go up in value with the rest of the things we talk about. But yeah, that's a big thing is debt service. I mean, I go get debt and then I'm going to have somebody else that's looking for that asset or looking to use my asset, which would be rent. I'm going to charge them a certain fee and they're going to be paying down that mortgage payment for me. It's not going to come out of my pocket. Quite the opposite. More money is actually going to come into my pocket. You get what I'm saying? So yeah, that's a huge one is debt service. All right, you guys. So the next thing we're going to be talking about is cash flow. Now, we already kind of went into with debt service, but like I explained, let's say our mortgage payment's $1,200, and that's everything. That's your monthly expense for this property. Let's say it's $1,200, and then you're renting that for $1,600. So not only are we getting that debt service, the mortgage is getting paid off free and clear. Typically, if you get a good deal, you're going to be making extra money every month on top of that. So in this example here, if our mortgage payment was $1,200 and then we were renting it out for $1,600 every month, on top of getting a free, on top of having your mortgage paid for, you're actually going to get a couple $100 on top of that every month off the top. Now, some of you guys are going to say, oh, well, $400, $500, how is that a big deal? Well, let's say you're making honestly, guys, especially if you're in the Midwest, you can definitely make $500 to $600 cash flow. I wouldn't say relatively easy because real estate isn't easy, but it's definitely possible. I know me personally on my rental property, I make like $650 in cash flow every month. And while that might not sound like a lot, listen, that's just one, guys. Let's say you got 5 or 10, you know what I mean? And you were able to save up that 40 grand and get that every year or every 2 years, once you get 6, 7, 8, 9, 10, and you're making $600 a piece, well, now you're talking $5,000, $6,000, $7,000 a month in just cash flow. Just cash flow. And then you're also getting all those mortgages paid off. And that's equity, guys. That's money that you can use. You can pull off that equity, borrow it. When you sell the home, you're going to get the equity back. I mean, this is all money. And you can't just be looking at what's the cash. You know what I mean? This is all cash. You know what I mean? And too many people get focused just on the cash flow, but this really is all money in your pocket. Really, these 4 things. So just keep that in mind. Cash flow is a big, big thing with real estate. It's awesome. I mean, it's just passive, you know, and I really like to quote my mentor, real estate is not passive at all, right? But it is passive in a way because if everything goes right, and if you're investing in a good area, I know you see people on social media, they're like, oh my gosh, it's just going to blow up. Your tenants are going to light the house on fire. Guys, if you rent in a pretty good area, people are just going to live in the home. It's not like they're going to jump in there with a chainsaw and a machete and just like go to town on it. Like, it's going to be fine for the most part. So quit worrying about shit like that. Okay, that brings us to the fourth thing we're going to talk about. That is appreciation. Now, just like any other asset, Bitcoin, real estate, stocks, all that good stuff, assets go up in value over time, just like anything else, any other asset, right? I mean, you'd hope. Obviously, there's some that go down if you're a crypto nerd. I'm kidding, I'm kidding. But seriously, guys, appreciation, that's basically so. I mean, if you look at the chart of the median home prices in the US since like 1965, 1970, I mean, it's a steady incline. I mean, it's skyrocketed. I think the average home price in 1970 was, I think, like 65,000. Don't quote me on that, but it was somewhere around there. And now it's, 300,000 or something like that. So not only are you going to be getting your mortgage paid for, you're going to be getting cash flow. This property is also going to go up over time. You know what I mean? Oh God, this is a terrible graph. Okay, let's just pretend it's a graph. This marker is dying, but it's gonna keep going up in value every time. Now, to really highlight this, I like to use my own example again because it's something I can put into words and really explain to you guys. So, I bought a house for, let's say, 195,000. Well, the next year it had gone up. It was now worth it was worth around 240, $250,000. So if I bought it at, around 200,000, 195, and the next year the market says, yeah, this house, people are willing to pay 240, $250,000 for it. Well, guess what, guys? That gives me more equity. That's cash in my pocket again. If I bought it for 195 and I wanted to sell it immediately, the next year or whatever for 250, well, that's $50,000 right there in cash. Or if you're smart, you should just keep it in equity, especially if you're going to hold long term. So that's what you get with appreciation. And once again, guys, this is dollars in your pocket. This is adding to your net worth. It ain't all about cash. Cash is important. I'm not one of those like cash is trash people, but cash only gets you so far. Putting this right here into things like this is how you multiply your money. Cash goes down in value every year. You know what I mean? If I take that same cash and do like this example, I'm now getting paid here, 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 and here. You know what I mean? So it's important stuff. Appreciation is super important. Okay, guys, the last thing I want to go over and talk about is what is depreciation and tax benefits. So we already talked about how the property actually all real estate historically it goes up over time, right? There's only a finite amount of land and properties and whatnot, so it will always go up, guys. I mean, it's in my opinion, I think it's one of the safest investments you can make. I mean, it's physical, it's there, you're controlling it. Obviously, there's some nuances there with the bank and whatnot, but for the most part, guys, it's going up in value, like for sure. But depreciation, so what that is basically the IRS allows you to depreciate the home. So it basically says the IRS is saying, all right, yeah, you're owning the home. It is going to go down in value. It's not really, it's actually going to go up in value, but they're saying the wear and tear on it is going to make it go down in value. So you can actually claim against that property. They just changed it, but I believe it's either 3 or 5% of the property's value or of the property. You can claim against that. You know what I mean? So let's see, what's a good example here? Let's just use the $200,000 example. If you can claim 5% depreciation, let's see, what would that be? 5%? That'd be like 10 grand. Yeah, I'm thinking they moved it down to like 6 grand. It'd be like 3% now. But basically, with depreciation, you can claim that against the property. And basically, you can take this and you can offset any sort of income you make with this property. So that's where we get into the tax benefits as well. When you start getting rental properties, you want to get yourself an LLC, some sort of S corp, some sort of company. The reason why you want to do that, like my property, for example, it's in a company. It's in my company, and what that allows me to do is any expenses that I have for this property, plus more, really, I can claim that as business expense. So, let's say I'm in this example, I'm making this money on it, whatever. And then I go and I have to redo the bathroom and it costs me $10,000. Well, that's a business expense. If I make 20 grand this year, let's say you make 20 grand in your rentals. Well, if you had to spend 10 grand, if you have a company, that's a business expense. So if you make 20, you're going to be able to take that 10,000 that you spent putting into the property and deduct it from whatever you made so you're not taxed as hard. A lot of people have a hard time wrapping their head around this, but tax is huge. Like, again, that is cash in your pocket. Like, anytime you're saving money like that, it's adding to your net worth. It's helping it. You know what I mean? Don't get so focused on how much cash is it bringing. Really wealthy people, they focus on things, all the other things, really. The cash flow is almost the last thing I mean, it's important. It keeps your business alive, but really, guys, these are huge and they're often not talked about and they're forgotten. Alrighty, guys, I think that about wraps up today's video. Obviously, as always, we could go way deeper into a couple of these things, but I want to just give you guys, what's most useful for you guys. So I don't want to sit up here and give a super complex lecture that you guys aren't going to be able to understand or apply to your own life. So I just want to give you that simple overview on why this stuff works and why the wealthiest people and 90% of millionaires are made doing this exact same thing. It's not easy, but it is simple. Okay, so it's really just a matter of pulling the trigger and doing the work. And really, I want to mention to you guys before we wrap up this video, doing your first deal is going to teach you way more about all this stuff than any YouTube video, any book, any podcast, any of that bullshit. Take action, guys. If you're really about it and you want to do this, pull the trigger. Jump, especially if you're young, jump into it. If you don't like it, whatever, sell it. Do what you got to do. But if you're going to sit there and just analyze, you're going to get analysis paralysis and you're never going to do anything. You're not going to make it happen. Okay? So you got to go out there, find an agent, and, get to talking with them. Especially, a big thing I want to mention is, find an agent that is actually investing. You know what I mean? I see on all these agents, buy, sell, invest with me. And then you say, well, how many investments do you have? Well, I don't have any rental properties. I just know how to go get them. Well, that's a huge issue, guys. So I encourage you guys, and I was lucky and fortunate enough to run into an agent that was successful in this stuff and could explain it to me, not just with theory, not just with his opinion, but actually with real world experience, guys. And that's really important. So I know that might be difficult for some of you guys to figure that out, and honestly, that would be pretty awkward going up to an agent and be like, well, have you invested? But, if you're looking for an agent who has invested, who works with a team that invests and has done this for years, check the description, guys. Hit me up. I can definitely help you out with that. So I appreciate you guys tuning into this video. I hope you learned something, and I'm excited to keep doing videos like this to help you guys out so you can change your life, you can get more money, you can have that financial security that you're looking for. That really fulfills me, guys. Like, if I can help some of you guys and change your life the way that this stuff has changed my mind and my life, that would be the ultimate. So that's why I'm here. I want to provide value to you guys. I want to deliver it in a simple way, not a complex way, so you guys can understand it and apply it to your life. So appreciate you guys for tuning in, and I'll see you next week.